Good morning, good evening, good whatever time it is you're watching this. I'm Dave with Cups and Handles, and in this quick market recap, we're going to break down today's SPY price action, identify the key technical levels that matter, and discuss what I'm anticipating for the next trading session. We only have a few minutes, so let's jump right into the charts. Hey everybody, welcome to today's video. We're going to, as always, go over the recap of the day and the next day analysis. So let's jump right into it. And we're going to go into the 15-minute time frame here. And we're going to pull up our drawings. Now, I'm going to go back to the 4-hour, but we're going to hop back to the 15 in just a second here, just to kind of show you what's going on. Okay, so we have our major consolidation channel. Those are the white lines here. And let's go back to the 15. So today we kind of had two different scenarios, right? We had either we were going to pull back up into this consolidation channel because we did break through it during the after hours and the overnight yesterday, or we were going to continue downward and basically start heading down towards the next support range, which is at the 758.11 or the 20-day moving average. Okay, now we're not close to that yet at all. Okay, as you can see today we pulled upward. So we had a major support or a major resistance range that we needed to break through. And we broke through that this morning. It was at 769.89 and the next resistance was at that 773 on the dot. Okay, so with that starting to occur, we had this pretty interesting price action going on. We had a large head and shoulders being created. Sorry, just adjusting the drawing. So we had the left shoulder, the head, and the formation of the right shoulder. Doesn't look super clean, but it is there. And with that, we started to pull downward. Okay, now we actually had this very interesting range at the 768.21. And with that, we essentially formed a very large inverse cup. Okay, now what does that mean? Is that potentially from this point, we can start seeing an even larger head and shoulders in the after hours and the overnight. Basically form that right shoulder and start heading back downward. Now, with that said, okay, um, we did see some decent buying today. And I do attribute a lot of that towards the bottom of that channel, along with some of the macro conditions going on. I know some people think that these are just arbitrary drawings and these lines don't matter, but I disagree with that immensely. I think they matter quite a bit. And we see a lot of these ranges being tested, retested, and, traded around. Especially our support range or our resistance range in here today. Remember what we kind of always say is that resistances generally turn into supports unless the market's, starting to get ready to crash. We pulled above that range. As soon as we pulled above that range, we started selling down. As soon as we sold down, we started pulling up. As soon as we pulled up, started pulling back to that range. So this range of control was very, very tight today. Now, I had a very busy day, as basically this entire week has been, so I haven't been able to sit here and watch the charts. I didn't get a chance to check the gamma walls or anything. However, I'm sure they were fairly close to that range, and then we probably closed in between the gamma walls. Okay. Trading is a skill that can last for a lifetime. Join my Patreon for live classes, my personal market analysis, premium Discord access, and direct communication with me. Invest in yourself, become a more consistent trader, and build a better future for yourself and your family. Visit patreon.com/wooksy to join today. Thank you so much, and let's return back to the video. Now, the FOMC meeting minutes today did come out. There was a little bit of hawkishness in it, but overall it wasn't too bad. And as you can see, when we get to... So I'm trying to get the time very correct. Second, we got to basically 2 p.m. We started seeing quite a bit of selling. Okay. I don't want to say quite a bit, but we did go from that 770.51 basically all the way down to that 768. Okay, and we closed at the 769.06, so a pretty neutral close. Now, with this, we need to delete this resistance because that no longer holds a lot of weight anymore. We can go ahead and delete this head and shoulders because we're not going to focus on that. And one thing I do want to focus on is that this is not a finished cup. Okay, I know some people were talking about that in chat. I disagree with it. We need to see this entire range closed and pushing above that cup line to really solidify that that was going to be a bullish cup. So bullish structure, not very present just yet. Now I want to go to the hour, yeah, the 1 hour time frame. And this is something we were talking about in yesterday's video, how potentially we can start forming this head and shoulders. Now it looks very, off center, it looks very wonky, but the liquidity is all there. We have the left shoulder, we have the head, and we're starting to form that right shoulder. And what's on that right shoulder potentially? Again, there's a small head and shoulder starting to form. So that's starting to tell me that very potentially we could be breaking through this channel. Now, kind of the targets we need to be looking at this point is that 765.86. That was not tested during the intraday. Remember, that was tested in the overnight slash the after hours or even the pre-market. I need to adjust those colors. It looks like in the overnight, that's when that level was pushed. Okay. So very likely we're starting to form this head and shoulders. And if we're going to start heading down, that's going to be the first target. Now our second target might look like this 758.11, but again, it's not. It's going to be the 20-day moving average on, the daily time frame. And that's currently at the 759.77. So as of tomorrow's trading session, that will be at the 760 something. Okay, so that's going to act as a support range that we do need to break through. And going back to the hourly here. So that's the targets we need to focus on for the downside. Now for the upside, I don't know why I have this in yellow. We have quite a bit of resistances above us. Okay, so we have the 772.50, we have that 773 on the dot, and then above that there's really not much resistance until all the way to the 778.23. So if we are going to start rallying upward, what I do kind of expect here is to close this cup, okay, which that cup line is right at those resistance areas, start forming a handle, and push upward. Okay, that's what I would expect out of the bullish scenario. Now, one thing that I do expect at this point as well is to retest the daily or the 5-day moving average. Okay, 5-day moving average is at that 772.68. We did not test that today. It was at our high of the day was at the 772.47, and this 5-day moving average will be pulling downward based on our close. So it probably will be at that 771.20-ish, give or take, which definitely puts it within range to be tested over the next, 1 to 2 sessions. Especially if we're going to be trading within our consolidation channel. That gives us plenty of room to be trading in this range, retest support, build that right shoulder out, and then once that level's retested, and we can determine if the market's going to reject it or, push above. If it starts to reject it, then obviously we can look towards that 20-day moving average, start looking down towards that 758. Okay, now going over the daily time frame here. Sorry if it sounds like I'm out of breath. So on the daily time frame, really just zooming in here, we do see that things are starting to look pretty bearish. Okay, our volume, sorry for the lines, is starting to drop off. Okay, the buying volume has dropped off, significantly. We're starting to see the selling volume pick up. Okay, we're about to have the 5-day moving average cross the 10-day moving average, which is kind of like the first bearish signal we need to look for. Sort of like when we were down here, that first bullish signal was seeing the 5-day moving average cross above the 10-day moving average. Okay, because that's how you start getting the crosses back to the upside. And in this situation, this is how you start getting your moving averages crossing back to the downside. So with that said, I I do expect that cross to happen. Basically, it will happen tomorrow. And from that, I do expect a retest of that level. And from that retest, if we don't have a major bounce to the upside, then our 20-day moving average is going to be the target. Okay, so that's really what I'm looking for. Now I just want to close this off. The ADL still is dropping immensely. Even with today's session seeing a little bit of buying, it's still just a straight drop off. Okay, ever since we hit not the all-time high, but the previous all-time high at that 776.90. Okay, um, and that's kind of when we saw the buying volume really drop off as well. So those are going, you know, creating a confluence between those two levels. Now, one thing I do want to show is that the VVIX did drop off quite a bit today. Okay, we did see the VVIX as of yesterday be at that 96.90, which is very high. It dropped all the way down to the 85.79, which that can be a signal telling us that dealers are no longer needing to put insurance on their positions. But when we start looking at the HYG, which is the high yield corporate bonds, we're starting to see a little bit of selling in here. Now, today's candle was pretty impressive, but within the after hours, we are starting to see a little bit of selling. And if we do see a continuation within this selling, that's going to be bad news. We're also starting to see this head and shoulders on the daily time frame starting to form as well. So if all these bearish signals continue to be bearish as the way they are, then that's going to basically start creating the conditions to have a sell-off. Okay. Um, and there's many different reasons for that. Besides all the technicals, we saw the higher highs, and now we're starting to see higher lows. Okay. Out of almost each session. Today we didn't get the higher or the lower low. Um, but we're starting to see the culmination of those lower lows kicking in. It's kind of like in this range when we were selling. We had the lower low, pulled up, retested support, dropped down, pulled up, retested support, dropped down, pulled up, retested support. Now I know we had a major rally from that, but a lot of that was news driven rather than based on the actual technicals and everything. So unless the news really shifts in the market's favor, I do expect more selling. Now, there is a lot of macro conditions going on that can cause some major buying. Okay, the Treasury has been buying a lot of the long-term bonds back up. We're starting to see the dollar drop quite a bit, which can definitely create some liquidity in the market overall. So we have to be a little cautious of those levels. But just to kind of top this video off here, we did see the Bank of Japan, or the yen, get bought up again a little bit today. It was actually quite a significant amount. Now, when I say significant, we still have a lot of work to do. Um, Really, when we had some of these major buys, we went all the way from that 160 down to the 130. We're still very far from that. Now, I do want to talk about this in Sunday's video, but there's a lot going on with the Bank of Japan slash, Japan in general, which is kind of creating some conditions where very, very likely they're going to start heavily unloading US Treasury bonds, which can absolutely start causing some, turmoil in the market. So we'll pay attention to that. Again, I am starting to get more bearish here, especially now that we're starting to see the daily moving averages cross down. We're seeing the ADL pull down. We're kind of seeing all those correct signals that we expect out of continued selling. So, with that said, thank you all so much for watching. As always, I appreciate each and every one of you, and I hope you have a great rest of your day, great trading day tomorrow, and with that, take care, everybody. That wraps up this market recap. If you found the analysis helpful, please take a moment to like the video, leave a comment, subscribe to the channel, and share it with someone who would benefit from these daily market breakdowns. It really does help support the channel and allows me to continue creating free educational content for everybody. As always, have a trading plan before you enter a position, manage your risk, and remember, we're not trying to predict the market, we're trying to prepare for it. Thank you all for watching, and I'll see you in the next one.